Today we're diving into an important topic that might feel a bit overwhelming for many, and that is what happens if you lose your job as an Australian expat here in Singapore. So I'd like to share with you a few simple tips to give some thought to if you're worried about losing your job, if you've just been through this, or if it's just something you'd like to give some thought to so that you're prepared. Hi there, I'm Jared Brown, Australian expat financial planner here in Singapore, helping Australian expats all over the world master their money. In this video, I'd like to share with you 6 simple tips to prepare for, or really start to plan for, what you would do or what you would need to think about if you lose your job here in Singapore. So let's dive right in. Now, number 1 is tax residency. If you're an Australian expat, it's important to understand when your tax residency would start on the move back to Australia. Far too often we hear people getting confused about the 183 days and assuming that because they were a tax resident of Singapore for 190 days or more or less or whatever it may be, they therefore couldn't possibly be a tax resident of Australia because they were a tax resident of Singapore. When in actual fact, in most cases, the day you land or the date you land in Australia with the intent to reside in Australia, that is the date from which you become a tax resident in Australia. So we need to give some thought to returning cash or CPF or SRS or investments. We'll dive into that a little bit later in this video, but all of these things that are going to be impacted by the change in our tax residency. So that's number 1 to give some thought to. Number 2 is thinking about the timing of the receipt of any bonuses or other income payments that we might be receiving. Again, far too often we hear people sort of getting this one a bit muddled, a bit mixed up, and assuming that even though they're in Australia at the time they received their Singapore bonus, because it was for work carried out in Singapore, they shouldn't have to pay tax in Australia. The issue, however, is that Australia taxes worldwide income on receipt of income. So even though it might have been for work carried out in Singapore, it could still be taxable in Australia. Now, of course, if you've lost your job through termination or whatever it may be, there may not be bonus payments to worry about, but in many cases there can be. So just give some thought to where you will be a resident when those payments are made and what makes the most sense for you. That's number 2. Number 3 is your tax clearance. Now, this is the IR21 form process here in Singapore. This is basically paying all of the outstanding tax to ensure you're allowed to leave the country. Now, this will be tax on income from last year if you're paying in arrears. It'll be tax on this year that you've accumulated based on the time you've already worked. Now, if you are actually moving back with the company and you're not being terminated, not losing the job and exiting that employment, there could also be deemed exercise tax to pay on any unvested shares, unvested options. In this example, we'll assume that doesn't apply, but just be aware of that deemed exercise tax that can apply if you're retaining ownership of those shares, of those options. But make sure we know what that tax clearance bill is going to be, speak to IRAS, speak to your HR department, and understand what those final cash flows are going to look like. So that's the next one. Now, moving into the Australian framework, the next thing to think about is our unused super contributions. Now, if we're moving back fairly late in the financial year and we're not going to have a job, or we're going to have fairly low taxable income in Australia this financial year, we might not want to use those unused super contributions because tax-wise it doesn't really make any sense, and we'd rather save them for next financial year. But if we're moving back early in the financial year and we're going to earn $200,000, $300,000, $500,000, $800,000, whatever it may be, or even if we're selling a property in Australia, then we might want to use those unused super contributions. And as you'll hopefully be aware from previous videos, but if you're not, you can check it out on the carry forward concessional super contribution rules. We can use up to the last 5 years worth of concessional contributions that we haven't used, assuming or providing that our superannuation balance was at or below $500,000 as at the most recent June 30. So don't ignore that one. It's a powerful tool to not just boost our retirement savings, but to also reduce our tax bill in Australia. So that's the next one. Now, the fifth tip, if losing your job in Singapore, is to review your ownership structures of any investments or even cash held in the bank. More important with your investments. If you have shares in your own name or investments in a company, in some sort of trust or some other structure here in Singapore, consider how that's going to be taxed when you return to Australia. With shares in your own name, you'll have what is called a deemed acquisition, which means that if the shares are trading at $80 when you return to Australia, that is now your cost base from which capital gains and dividends are taxable or calculated in terms of what tax is going to apply. So if those shares go from $80 when you return to $100 and you sell them within the first 12 months, then that $20 gain is going to be fully taxable at your marginal tax rate. So consider making any changes or restructuring your investments before you enter that Australian tax framework. Of course, ensure that it aligns with your goals, ensure that it's done for the right purposes, and of course, seek advice from your accountant, from your tax advisor. That's number 5. And number 6, when it comes to losing your job here in Singapore, is reviewing your lease agreement. Make sure there are no nasty surprises, make sure you're getting your full bond back, you're fulfilling any obligations that you have as part of exiting that lease. Make sure you can exit that lease without penalty, whether that be through the diplomatic clause because you've lost your job, or whatever it may be. You might be on a short-term lease arrangement and therefore you can exit that lease without penalty. But just make sure that if you need to repaint or have the curtains cleaned or whatever it might be, you're doing those things, get that full bond back, because that's obviously going to be helpful for your return to Australia. So there you have it, 6 tips that if you lose your job in Singapore, you can hopefully make that return to Australia that little bit more seamless, that little bit less painful. I hope that helps. If you're worried about this, reach out, drop me a note, feel free to leave a comment or send me a note, happy to book in a call and start talking through how you can prepare for this eventuality. But thank you for tuning in. Do remember to like, subscribe to the channel. I look forward to seeing you in the next one.